This is Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Ibn Abunda. Let's get started. Coming up, Zimplo Holdings reports that it will commit to long-term growth and sustainability despite navigating a turbulent 2024 marked by currency volatility, delayed rains, and economic headwinds. In the first quarter for the year 2025 trading update, the group recorded revenue of $7 million, reflecting a 14% increase over the same period last year and 2% above budget. However, this growth was offset by persistent margin pressure, culminating in a net loss before tax of $513,000 United States dollars. The Monetary Policy Committee maintains a tight monetary policy stance to sustain economic stability. That's according to a statement issued by the Monetary Policy Statement yesterday. The bank policy rate remains at 35% per annum, with reserve requirements unchanged. Adoption of the Z currency continues to rise, now accounting for 43% of formal transactions, supported by gold, minerals, and forex reserves. Inflation remains under control, with projections showing it's closing below 30% at the close of the year. Of course, we take a look at these stories in detail here on Beat the Market. Beat the Market, be right back. Don't go anywhere. You are watching With the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Ibn Mabunda. Now we take a look at our main subjects in detail. Zimplo Holdings reports that it will commit to long-term growth and sustainability despite navigating a turbulent 2024 marked by currency volatility, delayed rains, and economic headwinds. In its first quarter for the year 2025 trading update, the group recorded revenue of $7 million, reflecting a 14% increase over the same period last year and 2% above budget. However, this growth was offset by persistent margin pressure, culminating in a net loss of $513,000. Tractive Power Solutions, which posted a 174% revenue increase compared to the first quarter of 2024, as Zimplo intensified its focus on the mining and infrastructure space, an area it views as key to its future footprint. Meanwhile, Scanlink led the automotive division with a 44% revenue increase. I'm now joined by Morgan & Co. Head of Research, Tafara Mtutu, to unpack these figures. Tafara, hello and welcome to, of course, Beat the Market.
Glad to be back.
Fantastic. Always a pleasure having you in conversation. What's your assessment of the overall performance of Zimplo?
I would say it's too early to tell. Zimplo is mostly in the agriculture sector, and other sectors as well, but mostly agriculture. And given the seasonality of the sector itself, that has also rippled into their business. So when you look at the first quarter of Zimplo's results, it's a story that's still unfolding, because most of their business, we expect that it will come in the future and not in the first quarter. So first quarter is mostly maybe, production, cost accumulation, and that's why they had the losses. But I think there's more to tell, or there's more to the story, and I think the figures would tell for themselves as time goes on.
Right, revenue jump of 14% to $7 million in that quarter, against the bottom line that's $500,000 in losses. How do we reconcile the two?
So the growth in revenue, or the performance in revenue, I would say it mostly lends from what was happening in the agriculture sector, specifically in the wheat production, because what business they're getting right now, I believe most of it is coming from from the wheat wheat production. That has been doing well. Hectareage continues to go upwards, and that it's dominated by mostly commercial and formal players in the agriculture space. And when you then dig deeper into those revenue figures, you see that the figures in sales volumes that were positive, tractor sales, that was mostly because there's formal, the former wheat players had some money to spend in terms of buying more of the implements and tractors. And at the same time, the part of the agriculture sector, which then drives most of that business, agriculture operations, which is small-scale farmers who then require the hand-driven implements. Those farmers are still harvesting, and they're still going to, they haven't made much sales. So you're seeing that the Farmic, the Millie brand sales have been very low, because we're still yet to see that those sales coming through post-harvest.
Right. Let's zero in on some of the units. Farmic exceeded its Q1 budget by 6%, driven by model MF200 tractor sales. How sustainable is that growth?
I think going forward, they could keep those numbers up. We're seeing that what's happening in the agriculture space, there's a lot of equipping of both the small scale and the large scale farmers. Through partnerships with countries outside, like your Belarus and China and all those other countries. So they are coming in, they are capacitating the government, and that's then rippling into the agriculture sector. So I think we're likely to see more of those tractor sales happening, but not at the pace that we would want. Ideally, if there were financing solutions that then speak to the needs of especially the small-scale farmers, I think we could start to see a jump in those figures.
I know that you spoke about Millibrand. Let's turn to Tractive Power Solutions, which posted an impressive 174% revenue growth, but still fell 37% below budget and suffered margin compression. What could be the underlying factors in that specific subunit?
So what's happening in that space? You're looking at tires, you're looking at automotive solutions. The challenge in that sector really has to do with competitive forces that are at play. We're seeing a lot of competition in that space. We are seeing a lot of margin pressures from a price point of view. Most people that need the equipment that Zimplow sells or provides, some have decided to just stop outsourcing the services or buying from providers. They just import on their own, and then they just have these things in-house. So there's a substitution effect that's taking place from that space. And then you're looking also at the mining space, where a miner or a mining company, especially Chinese mining companies, they come in, they've got their own equipment, so everything happens in-house within the company, and hardly will they need to source some of the equipment and services to companies like Zimplow now.
Right. Trend Tire's performance declined 39% year on year. What's behind that drop?
So like I said, it's mostly to do with competition. What we're seeing now is there's been a decentralization of tire service providers. You go in Harare, you just drive around every corner, someone's just starting their own little shop where they do tire repairs, or they sell tires, and a lot of people are actually responding positively to that. So now there's just a sprouting of these segregated individual shops that provide similar services to what Trend Tire provides.
Would it be a true assessment to say that the informal market is also eating into Trend Tire, as it were?
Yes, the formal space is actually cutting into that. But some of these players, they are small, but they are formal. They are registered, they pay their licenses, they pay their dues. So I wouldn't say it's small, it's tiny, but the magnitude of those small formal and informal players is really eating into that market share.
Zimplow is now focusing on liquidating high value and aging inventory. Why is that important, and what could this translate to for Zimplow?
So what happens in the space that Zimplow operates in, there's constant development and innovation. If you've been to the recent ADMA show, you see that there's the machinery that's being sold.
Yes, I was there. You've got a hive of activity and different forms of equipment that are right there on display.
Yes, exactly. So you have to compete with that sort of innovation, where maybe someone needed three implements to do a job. Now there's just one piece of machinery that can do all these things. So if you continuously hold on to this old obsolete equipment, you won't be able to sell it because people are already moving on to the next new thing. So that then affects your sales. And if you hold on to it for long periods to a point where you cannot sell, you're going to have to write it off. And they recently did that. I think that was in 2023, where they had to write off a significant portion of their inventory. So then that then means you're not going to get much from that, and you're going to record that as a loss to your business.
Quite concerning at that. Now let's talk about how it is that we've seen a shift in terms of the brands that are used in the market, and the impact that will have on the sustainability of Zimplow's model going forward.
I think it really speaks to who has the money, or who can facilitate the movement of the product that you're selling. Zimplow has been struggling because they've mentioned that there aren't financing opportunities from the banking sector that can help them to say, look, there's a farmer that needs this implement but they can't afford it right up front, so let there be a financing solution and then they'll provide the equipment. But now you're seeing some of these players, there are players who come in with the financing, especially offshore. But part of that financing means we'll provide the financing, but we'll also provide the equipment. So you have the funds. You can then decide or control and say, look, I want my product to be sold through this financing facility. So if there is not if that financing facility is absent, it means you don't have that pool in order to have many of those sales. So this financing, I think, is a big thing going forward for them.
Right. Given the record gold prices that we're seeing, why hasn't the mining and infrastructure division fully capitalized on the opportunity, and how much of a constraint is the lack of short-term finance for small to medium miners?
So yes, the gold sector is doing very well. But when you look at who's really driving the deliveries in the country, it's the small-scale miners, like you've said. So these artisanal miners, they don't have access to. Most of them are informal. They don't even have papers. They risk their lives to go into disused mines, or they make their own shafts, and then they dig for the gold and they do whatever they do. But at the end of the day, whatever money they make, they haven't. It's a very capital light process for small-scale miners, but highly risky. But in doing so, it means whatever money they make, the priority is to enjoy that money. No one is going to say, I've made maybe $5,000. I'm going to put a down payment on a rig or a formal operation. Most of these people, they just do whatever they're doing right now. It works for them, and they don't need a lot of equipment. So they need to find the way to say, look, we have something that can appeal to these small-scale miners. That's not cost-intensive, but that also makes their lives easier. So I think there needs to be a shift in terms of thinking of the needs of this particular people, in the same way that they have different products in the agriculture sector, where you have tractors and complicated machinery for large-scale miners, and just hand-drawn machinery for your small-scale. I think they need to do the same in the mining sector.
And what's your assessment of the group's plans to enforce stricter payment terms and implement cost-saving initiatives across the other units?
I wouldn't say it's something that's unique to the business. In fact, most of the C-level executives in the country, that's what they're trying to do right now. They're cutting costs by removing redundant staff positions. They want to reduce the cost as much as possible. If they make products, they want to find ways where they can cut costs. And at the same time, in order to manage their working capital position, they need to shorten the days between selling the product and receiving the money if it's been sold on credit. So these are some things that are common across many of the businesses that are capital intensive, and we think they're in the right direction, but I think more also still needs to be done.
Now time for us to take a breather. When we come back, we take a look at the recent shifts introduced by the Monetary Policy Committee. Now the market will be right back. Don't go anywhere.
Harare, tune into the beat. Capitalk 100.4 FM, your source for news, business, sports, fashion, and more.
Experience the pulse of Harare's culture and lifestyle.
Capitalk 100.4 FM, Harare's top radio station.
Join the conversation with Zimbabwe's top personalities.
Subscribe now for fresh and infotainment content daily.
Capital 100.4 FM, Harare's heartbeat.
Didn't graduate? I guess I blew it.
You couldn't advise him anything. He would just look at you and say, so who do you think you are?
We were just like really spoilt.
And then they just give me the receipt and I'd pay.
The guy walks in one day and then he says that he wants to make a movie.
He was blowing the money.
There was just like this habit that he had where as soon as he got money, it was gone.
I just didn't have the skills or the experience.
This money, I could see it disappear so fast.
Welcome back to Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Eben Mabunda, and I am in conversation with Tafara Mtutu, Morgan & Co. Head of Research. Now, the Monetary Policy Committee has maintained a tight monetary policy stance to sustain economic stability. The bank policy rate remains at 35% per annum, with reserve requirements unchanged. Adoption of the Z currency continues to rise, now accounting for 43% of transactions, supported by gold, minerals, and forex reserves. Inflation remains under control, with projections showing it closing below 30%. Now, Tafara, central bank has chosen to maintain a tight monetary policy stance. What's your assessment of that position?
So, I've had this question asked to me. People ask me this question since the beginning of the year, and I told them our forecast or estimates as Morgan & Co. is it's going to remain in play until the end of this year. The main thing or the main reason why they will remain on this tight stance is they want to pull inflation lower, and that will really come into play. People really see it in the October inflation figures, because that's when you see inflation drop significantly on a year-on-year basis. And I know that the monetary policy authorities are waiting to show, Zimbabwe that, look, this currency is working. And that is one of the key, reasons why I think they will continue to hold on to this. But when you're looking at a longer perspective, I think this is just part of, efforts to gradually introduce the ZiG. I think I do acknowledge that, bringing a stable currency takes time. When you want to use the word stable, there needs to be a certain period of time that needs to pass when there's no volatility. And I think that's what the Monetary Policy Authority are trying to establish. They want to give it time to make people believe and appreciate that this is actually stable. And when that's the case, then they can start reducing reserve ratio requirements and then lowering interest rates. But until then, I don't think they're going to lower.
Right. Now let's talk about how it is that interest rates are at 35%. That sounds punitive. At the same time, the central bank in its defense says we've put together a targeted finance facility that's there to provide for the interests of the productive sectors of the economy. You look at the figure that they put up yesterday, that's about $15 million that's been dispensed under the targeted finance facility. Looking at the 35% interest rates and the 15% against this kind of an economy, how do you reconcile the two? Does it make sense to you?
On the backdrop of that is abuse of the lending system in Zimbabwe. You had a huge disconnect between inflation rates and interest rates. And when there's a disconnect, it's such that the real interest rate is peanuts or even negative, you run the risk of having a volatile currency, because then that's when that issue of burning currency comes into play again. So having interest rates at 35%, which is in line with current inflation expectations of 30%, I think it's fair at the moment. It's tight, but I think one of the reasons why they're doing it is they need to slow down the pace at which money moves in the economy. It's been unsustainable, in our opinion, and it needs to be slowed down. And I think people are struggling to react or to adjust to that. And the first instinct is to complain and say things are not working. But I think this is something that takes time. And I think if it's done right, people start to appreciate this, I think maybe, as early as next year. So I think it's just a matter of things need to slow down to a sustainable pace, and then we can start from there.
Right. Let's talk about the adoption of the domestic currency. According to that statement released yesterday, there's been a jump from 26% to 43% where the national payments system is actually concerned. And this speaks to the formal transactions in the economy. Your take on the adoption of the ZiG?
Those figures, I think there needs to be more that needs to be given, because if you say that the use of ZiG has increased, when you go out there, that's not the case. And I use the stock market as the barometer for this, because when there's enough or sufficient liquidity for ZiG, you can see the ZSA responding in kind. Not to say that it's spiraling out of control, but you can see some activity. And right now, what we're seeing is it's actually the opposite. It seems like the stock market is worse off than before, and it speaks to the liquidity of the ZiG in the economy. So I think when they're saying there's a lot of ZiG being used, is it really because there's more transactions being done in ZiG, or now there's just less USD transactions being done, such that it seems like the use of ZiG has increased? So like I said, there needs to be more information given out so that people can really appreciate what's really happening. Because when you talk about percentages, you can
come in there. This does not account for the informal economy of Zimbabwe, which is estimated to be north of 60% of the country's GDP. So when you look at it from that perspective, has central bank done enough to ensure there is widespread usage and adoption of the domestic currency?
Like I said, it's in two parts. So you can say there's more ZiG now being in use, but maybe it was just maybe 10 million ZiG, and this year it's still 10 million, but the USD transactions on the other side have gone down, which means the 10 million now counts for more. So it can be a matter of perspective, and I think we need more than just percentages. We want to see the actual figures to say how much ZiG has been been used in transactions, because what that could mean, it could really help us understand whether ZiG is actually being accepted widely, or people don't believe in what the central bank is doing to an extent that now they've decided to move even their USD transactions into the informal sector.
Right. Reserves are worth 700 million according to the central bank. You look at Botswana, they have reserves to the tune of 3 billion. South Africa, north of 60 billion United States dollars at that. May you speak to the fact that there's been the increase from about 300, now we are at 700 million. Why is that important?
It's good. It means they're walking their talk, and they're doing what they possibly can to actually make the ZiG a strong and reliable currency. But we still have a long way to go, because I think we need to get to a point where they can now allow things like fuel to be sold in ZiG without any friction being caused, especially in the energy sector. So right now, I don't think the reserves that we have are enough for that. And I think they still need to continue building up those reserves so that there's more confidence, enough for them to then move on to the next step of allowing a lot of USD sectors transactions to be done in the local currency without any effect on exchange rate.
Right, statutory reserve requirements were left unchanged. Does this indicate the RBZC's current liquidity levels as appropriate? I will ask.
I think they appreciate that it's too tight, but I think the assumption maybe is that, you know what, you have USD on your in your coffers, lean on that while we fix the currency. Secondly, there's the lines of credit that are flowing into the country, and I think they're saying, look, for now, leverage off that, and then that can give them that leeway to continue holding on to those funds until they feel that the stability has been widely accepted in the country.
Right, and there will not be any issuance of new gold coins onto the market. However, those that are already in circulation remain tradable, according to Dr. John Moshayavanu. Your comment?
Yeah, I think now this is the time where a lot of people would have wanted those gold coins with what's happening with the gold price. We've long wanted to have this kind of asset on the stock market available for the public, because as it stands right now, you know, it's quite difficult for just the average person to invest in that asset. And when you do, the prices are, you know, it's indivisible. It's too big. So we've long wanted to have those assets on the stock market, but you know, it's still a work in progress. But you know, the fact that he has to come in and say, look, we're stopping this, and you know, trying to manage, means that there's a lot of demand and people asking for these you know, alternatives for savings.
Tafara Mtutu, Morgan and Co, head of research, joining us, of course, for a conversation on Beat the Market, and a regular contributor to all matters Beat the Market. Tafara, thank you for joining us once again.
Always a pleasure.
Fantastic. And of course, that's a wrap on Beat the Market today. Do follow us on our social media handles at Zim Papers TV Network, as well as at ZTN Prime. Your views and your thoughts are important to us. I'm Ibn Mabunda, the money man. Let them do what they do, where they do what they do. When we do what we do, we mean business. Thank you for watching and have a good day.